Welcome everyone to our 2025 Coffee Chat season. I'm Fernanda Landgraf. I'm a senior analyst and project manager here at PCMI. And if you are new here, first of all, welcome. We hold these chats once a month. Last year, they took place on the first Mondays, but we have changed the schedule to test a few things. So now this year, they will be on the third Wednesdays of the month at 12 p.m. Eastern Time. We host these events to have a space for the people of the industry to share some learnings, questions, trends. And at first, it was very focused on Latin America, but we are increasing our reach and we have people from all around the world joining us. So our content is also more global. Feel very welcome also to add to this conversation. This is not a very typical webinar. I mean, we do have some guest speakers, but the idea here is to have an open conversation. We truly encourage comments and questions. The more you put in the sessions, the more you get out of it. So please feel very, very welcome. Wow, can we move to few slides so just we can get some guidelines for the meetings? Okay, so
Fernanda, we're not yet sharing the slides. Or
no?
Oh, I'm sorry. That was my bad. We are.
Okay, sorry. Yeah, okay.
Throw you guys off.
Okay, Lau, just go to the guidelines. So just a few things to ensure a successful meeting. We would love to have your cameras on. Feel also free to open your mic, make some comments, ask some questions. If you prefer, you can also use the chat. And just keep in mind that we do publish these materials. So just mind your comments as you would in any in-person event, all right? Moving forward, okay, so this year I will be hosting our sessions together with Lautaro. Lindsay will join most of our sessions, but she won't be hosting it. So I truly hope I can meet the standard. But Lau, also feel free to introduce yourself.
Yeah, well, hi everyone. My name is Lautaro. I'm based in Buenos Aires. I joined PCMI before PCMI existed. So it was AMI back in May 22. And yeah, I work as a senior analyst and PM at PCMI. So yeah, let's get cracking.
Thank you, Lau. Awesome. And for opening our 2025 season, we have our managing directors, Lindsay Lear and Cesar Borali. So I will leave the stage to you guys so you can introduce yourself and also talk about the content we have for today.
Wonderful, guys. Thank you so much. Hi, everyone. It is great to see you all. Great to be back. We've got some new faces. We've got some familiar faces. And my usual suspects, I'll be counting on you to get the conversation started. So if you're brand new, my name is Lindsay Lear. I'm leader of PCMI, and we'll be kind of presenting some content for you guys today and then leading a discussion in the group. And I'm joined by Cesar, who many of you know, but I'd love for Cesar to give a quick intro.
Hi everyone, and good to see you again. Yeah, I'm Cesar Borali, Associate Managing Director here at PCMI, mainly covering banking and fintech, and based out of Brazil.
Okay, cool. All right, so let's go ahead. Guys, what we're going to do today, many of you may have seen this launch of our Coffee Chat is coming right off the heels of 3 weeks in a row in which we conducted a series of webinars called The One Thing, right? The one thing that we want you to pay attention to in key markets around the world in 2025, where we think strategically it's important for you to place your focus and really understand what's going on. So we're going to do, I don't know how many of you caught the Latin America webinar. We're going to do a quick review of that content and then kind of tie some of the global trends we saw together and make some predictions for 2025 and into the short and longer term. So it's a very exciting kind of year. We have a lot going on in the industry. It's been about 3 months since we saw you guys last, so I'm excited to guide this conversation. All right, so starting with the context, I just want to, you know, as we said, I know this group is very focused on Latin America as we historically have, but it's very beneficial to compare with other regions of the world. And also, you know, Latin America is increasingly impacted by global trends, especially the US, increasingly Asia. So we're going to be looking at all of that. Now I'm going to present a few slides right now, but again, maybe you've already seen this content. I really am curious to know how you're reacting to the content, what questions you have, what impressions or feedback if you have a different perspective. So please do jump in at any time, okay? So what we did when in the first thing webinar, the one thing webinars was just kind of give an update on payment method distribution among consumer expenditure and looking at, you know, the evolution of cash, right? Cash is really our proxy for how digitized an economy is, how digitized payment methods are. And so here we can see, you know, the multiple markets that we looked at. With Latin America, you've got Mexico, Peru, DR, Chile, and Brazil, really leading right around the same level as the United States. We've got Australia, China, and Singapore leading globally, and trailing globally are markets like Philippines, Guatemala, and Vietnam. This puts us at just looking at these markets at a simple global average of around 36% of cash penetration of consumer spending. And that's about, you know, thinking about a third of volume paid for in cash. That's really remarkable progress in the past several years. We've been tracking this in our coffee chats and at PCMI. And really remarkable is kind of Brazil and Chile's. We see Costa Rica, even Argentina and Colombia have made really significant progress. And what that means, I think, is a couple of things. If we go to the next slide, for Latin America, kind of some major summaries that we want to start to segment the region, right? We've made really big progress in payment digitization. And so that means that strategies have to evolve. And we kind of have the markets grouped into three categories, right? Digital, what we call digital expansion, which is Brazil and Chile, which is cash is really only used in rural areas or, you know, by unbanked population, which is increasingly a very small segment of the population. To continue to grow digital payments, you have to think about digitizing other areas of the economy other than cash, specifically traditional money movement, like boletos, like TEDs and docs. And we see PIX increasingly capturing a bigger share of this. Same as in Chile. All right. In other markets in the region, the bulk of the region, right, Colombia, Mexico, Peru, is going to be cash penetration is around 30, 40, 50%. And this is where cash is going to continue to decline based on acceptance, primarily of small merchants. This is the area of payments where there's still a lot of room to grow, and small merchant acceptance is going to be a huge driver of digital payment growth. Now, in some markets, Guatemala, Dominican Republic, Ecuador, Bolivia, other countries in Central America, there's still major infrastructure challenges where cash is heavily used throughout the economy. And there's still kind of back to the basics infrastructure and competition issues to address. And this is where regulators really need to be engaged. Public and private partnerships and cooperation to increase competition, improve pricing, bring in fintechs and payment facilitators. The same playbooks we've seen work in Brazil and other markets need to be adapted for Central America, for the Caribbean, for Andean markets to replicate the successes we've seen in other markets. So I like this framework to help us understand the region is now more diverse and different than ever, and we really have to work on a country level basis to understand what's the strategy going forward. Okay. And then kind of same information, just plotted in a different way, right? Three strategies for continued growth of digital payments in Latin America, depending on which market you're in. So one is to add value to existing digital payments, right? Card payments, existing A2A payments. These networks and systems need additional value, and that's one way to grow through security, loyalty, omnichannel offerings, UX improvements, open banking, and credit. That's at the high end of the spectrum. Then we have, okay, we can continue to digitize traditional A2A, right? Converting boletos, converting traditional bank transfers, converting automatic debit to other value-added types of payment methods through targeting new verticals, through verticalized SaaS, through innovating in B2B payments. And then the third way to grow is continuing to digitize cash. All right, in some of these markets that we saw where cash penetration is still quite high, how do we do that? We repeat the playbook that's worked in other markets. We know that implementing and scaling A2A payments or RTP is a huge cash cannibalizer, right? Also expanding card acceptance footprint and empowering fintechs and new partners to increase competition, bring down prices, make products more accessible and user-friendly, right? The same kind of financial inclusion journey that we've seen happen around the region. Okay. So this was just a high-level assessment of Latin America, how to segment it, how to think about future growth as the region is very now diverse. 5 years ago, especially before PIX, markets looked more similar than they do now. Now there's a huge spectrum of countries in the region that we really need to prioritize at the market level. Okay. I want to pause, and any comments or questions on this just kind of early kind of view of Latin America?
I have an observation. You were saying about 5 years ago, everything was fairly similar. We've had a chance now to see what works and what doesn't. So in the areas where there hasn't been as much growth, then you can look and say, well, where have things worked better? And to a great extent, that's what these calls are about, is sharing knowledge, sharing experiences. So we can say, hey, look, this is an area where we can copy from PIX. Talk about one of the most stellar creations in this industry. It's been amazing what they've done. So there's a lot we can learn from each other.
100%, and we also like to start to look more at other regions, right? Look outside the regions to see which regions are ahead that we might be able to copy best practices from, or which regions are going to follow in the footsteps of Latin America, right? Great. All right, so moving ahead, kind of looking at, I'm going to go through this quickly because this is a repeat from our webinar. You may have seen it, but I want to hit the big developments that we're expecting in Latin America this year. All right, so the launch of automatic PIX, right? Recurring PIX transactions. We know that PIX has been a stellar success. You can see PIX merchant payments compared to credit and debit cards here in the chart. This year, recurring PIX is set to launch, as well as, not on this slide, but as well as contactless PIX, getting ready to further scale and be available across financial institutions. So these are two PIX innovations that are intended to make this payment method even more universal and adapt to different use cases, and could potentially will certainly help to accelerate PIX further, and could really just, as you can see in the chart, potentially set PIX really far apart from credit and debit cards. So I want to ask you, Cesar, you're in Brazil, you use PIX, you use cards. How are you feeling about this potential, this further disruption, PIX automatic versus PIX contactless? Do you have a sense of which will be more impactful? Have you already started to see impact of this? What are your observations?
Yeah, I think overall it resonates with what you just said about the traditional payment methods and money movement, and I think PIX is actually going for that right now, kind of like expanding the use cases. And PIX automatic, I think it's a good example of something that can definitely impact cards on like subscription payments, for example. So that they traditionally have a strong leverage over all other payment methods. And I think PIX automatic can compete with cards more directly in that front, but also on like traditional like subscription expenditure, right? Paying for your kids' tuition, paying for health insurance, all those payments in Brazil, they are done through boletos still. So I think it's a good opportunity for Pix to also grow in that front. We haven't seen much yet. Pix NFC was officially launched on February 28th, but it's still getting traction, especially with the wallets. I think the wallets will be a big part of it, starting with Google Pay, and then I think later on probably Apple as well. From a convenience perspective, I think it's going to be interesting also to see how Pix NFC can compete with debit at the point of sale, right? I think it's still Pix. It is widely used in the point of sale, mainly not only with informal transactions, even with larger merchants, but I think that's going to add a lot of convenience to the process.
100%. Ricardo has his hand up.
Yeah, I had a question. I was in Brazil last week. That it said the Pix enable process, but I see the wallet process incorporated as a part of the process, tokenization part of the process. If somebody know about more the detail, because I see to use a Pix in the mobile device, the point of sale, you must subscribe to Google Pay, Samsung Pay, or Google or Apple Pay to use it. It does mean there's some connection between the tokenization process with the wallet, with the banks to make happen. If somebody know the details, going to be interested to see, because that's the point. Yeah.
Yes, Gerardo, it's official. It was officially launched February 28th, especially for the banks. But it's you know, from a bank perspective, having to open your bank app and making the payment creates a little friction in the process as well. So we all believe that it's going to be much easier to use Pix NFC with Google Pay and Apple Pay, like you said. But it's still, they're in the process of rolling that out. I think Google Pay has rolled that out for a few banks already. And Apple, I think it's still discussing not only the tokenization aspect, but also the economics, right? Like if Apple will actually get an interchange from that transaction. So I think there's still a lot to be discussed. I'm pretty sure they're already discussing that. But as of right now, I think Google Pay is probably the one that is a little ahead of the curve from other wallets.
You see that process, sorry to interrupt you. Having said that, is the process is going to be the same time as connection, a tokenization activity. You need to do it for a credit card. Is something similar? That's your perception?
From operational
you have to be bank by
perspective,
bank, because it's going to be bank by bank, because it's going to be big way. It's going to be way by a specific bank. They want to enable the service. That's something like that. That's my perception. I don't know.
Yeah, I mean, like Google Pay and WhatsApp, for example, they already have licenses to be like a payment initiator service provider. So they already can orchestrate the transaction. What they need from users, it's like a mandate, right? It's a one-off mandate. So users have to have to give them permission to access their data and initiate the transaction. So the first transaction, you might see a little friction with users giving that
the tokenization process.
Yeah, allowing them to tokenize that and to access your information. And then from that beyond should be very similar to a card transaction using the wallet.
Got it.
Okay. Thank you very much for the details. Thank you, everyone.
Great. So we'll certainly be watching how this evolves throughout the year, but definitely a very important development to keep our eyes on. Okay. All right. So moving ahead, in a similar vein, we see in the next slide, we can see Mexico. Mexico is certainly the market to watch. Many of our clients and stakeholders that we work with are focused on Mexico from a digitization standpoint, a little behind. However, still 47% at least in cash, but with huge growth potential. I mean, if you look at these growth rates of cards and debt of credit cards and SPAY, what we call tercero a tercero, which just means actual bank holders making transactions amongst themselves, excluding large institutional transfers, you can see how aggressively these have been growing in recent years. Looking at even just January 2025, we can see how fast SPAY is growing in comparison to cards. So we know that, SPAY does not have the same nice user experience that PIX does. PIX-like initiatives from the central bank, such as CODI and DEMO, have really not gone anywhere. However, SPAY, as an overall payment system, a real-time payment system, is actually being adopted increasingly by consumers and merchants just for retail level payments without any additional user experience built on top of it. And just anecdotally, when I talk to people operating in Mexico, there's this general understanding that SPAY is becoming more top of mind as a payment method. And so we expect this growth to really surge as merchants become more aware, as consumers become more aware, and this idea of RTP and A2A payments become more widespread in Mexico. Okay, we continue. Colombia, along the same lines, once again, this RTP theme, of course, is very dominant around the world and including in Latin America. We see Colombia following very closely in the footsteps of Brazil, with the announcement of the launch of Breve, planned to take place in the second half of 2025. Breve is the RTP PIX-like system in Colombia, 24/7 transfers, a standardized user experience, and the interoperability of existing schemes such as Transvilla as well as wallets to allow for interoperable real-time payment across the multiple schemes that have emerged in Colombia. And we know from watching PIX and from watching other schemes around the world how powerful a system like this is for cash reduction, for financial inclusion, and overall payment digitization in the economy. Now, what is very optimistic, I think, about Colombia is the fact that since the beginning, they're very, it's been very open how closely they've been collaborating with the Central Bank of Brazil to learn to implement best practices. And already, largest banks in the market have enabled what they're calling las llaves, or the aliases for users to register to eventually be connected to Breve. And the use of the term llaves, I think, is indicative. It's the same word that's used in Brazil, just showing that they're kind of copying the Brazilians and I think in their mind going to implement something as similar to PIX as possible. Okay, moving ahead. Argentina, a little bit different. Argentina always moving along its own path. A little bit of a different topic here, deregulation, right? I think this is another global trend that we're seeing. We'll talk about in a little while. A bit reminiscent of the US market at the current moment, but with the new administration that came to power last year, we're seeing deregulation of the economy overall, and especially in the financial sector. Removal of taxes, removal of fees for cross-border transactions, a semi-dollarization of the economy, with prices being displayed in dollars, dual currency debit cards, enabling transactions in USD. This is going to promote overall business growth, right? An easier, more affordable, more predictable sector for business growth in general. But it will also have the impact of increased dollar-based transactions, increased cross-border transactions, and a boost of debit card and digital wallet expenditure, which are the two payment methods that will connect most closely to the regulation that the government is putting in place. All right, so we can expect Argentina goes back and forth on the desirable versus non-desirable for investment, and it's swinging towards that desirable, especially for cross-border merchants who are really interested in this market as an expansion market. Okay. All right, Chile. Chile, a bit of a quieter market. We don't see some of the bigger fintech announcements or central bank announcements coming out of Chile. However, it is a great market to observe for card-based innovation. Chile is a payments environment built on top of card infrastructure. especially in the past 2 years or a little bit more, we've seen the opening up of the acquiring landscape with the dominance of Transbank really declining, and now multiple acquirers operating in the business. And what's interesting about Chile is it demonstrates best practices for how to innovate with the card infrastructure being central. What types of use cases and payment experiences are available, right? So we're seeing things like software-based acceptance, right? Not as dependent on an actual hardware acceptance, but soft POSs, which enable the embedding of lots of different services in a merchant environment. Self-service, moving into vending machines, low-ticket retail, and new verticals. A fantastic growth market for digital wallets to observe how they're moving in the market and how they're capturing share. And one-click digital commerce, right? Cashier-less commerce, both in-store and online, enabling these autonomous mini marts that we see. This is not necessarily a new innovation. I think this Quick Eats has been around for about 2 years now, but it doesn't get the airtime I think that it deserves in terms of what can be done when you are enabling payments on top of card rails and acquirers and payment facilitators who really are invested in this technology. Okay. All right, going ahead. Okay, Costa Rica, just a couple more markets here just to do our Latin America recap. Costa Rica is another very fascinating market to understand and predict what's happening with RTP transactions, right? Costa Rica has been a leader in RTP for several years now with Sinpe Rails, their RTP system. And you can see, we see credit and debit cards are still dominant in Costa Rica, but you can see Sinpe Móvil P2M transactions growing in share. Now, what's happening, the major development we want to observe this year in Costa Rica is the central bank actually seeking to formalize and tax Sinpe transactions. Sinpe Móvil has been so successful that the government actually saw a decline in sales tax collection, right? As transactions were flowing to Sinpe Móvil, which are not taxed in the same way as card transactions. Card transactions are required there is automatic retention of a portion of sales tax on card transactions. That is not the case in the case of Sinpe Móvil. This has actually resulted in a declining tax base and the government considering enable VAT retention for Sinpe transactions in 2025. This is a controversial thing to do, and it could drastically change the market share of payment methods. And I want to ask Cesar, we saw kind of something like this attempt to be rolled out in Brazil this year. What happened? Remind us what happened in Brazil and maybe what we might expect in Costa Rica.
Yeah, I mean, beginning this year, the government also said that PIX transactions over, I think, 5,000 reais per month would be monitored and reported to the local IRS. And although they haven't mentioned anything explicitly about taxes, that was a big concern for most of the population already. That their transactions eventually would get reported to the IRS. So I think long story short, they saw like a big drop in PIX transactions within like a week after the announcement. And there was also a big discontentment from the population. So the government went back and said that the transactions wouldn't be monitored. And that's where it stands right now. But I think the message here is that as you digitize more the economy, I think those things will eventually come up again.
I think the Brazil example showcases, once you remove economics from an industry, it's very hard to get it back. I believe we will see a trend of the increasing formalization and monetization of RTP systems, but it's going to happen very slowly, very gradually, because of how difficult it is once you have this extremely aggressive forward movement. Okay. Excellent. And then if we move ahead, a final one here in Guatemala, which is, I think, another very interesting evolution in A2A payments. Now, Guatemala, we're calling this the first regional case of A2A payments and cards with presentment parity. What do we mean by that? Guatemala system from VisaNet, now NeoNet, launched last year and is, a latecomer, not a latecomer, but, came after the leaders in the region, right? After Brazil, after Costa Rica, and was able to observe and learn some of these best practices, and did this in collaboration with many banks as well as card networks. And so what's interesting about Quick is that it's from a card processor, right? So it's from VisaNet, now NeoNet. But what they're doing is enabling bank account payments, card payments within under one brand, and a flat fee, regardless of payment method, of 1.5%, which is the fee that's applicable even for credit card transactions. So this is the first time we've seen those three payment methods presented equally in terms of fees. Now, the economics are certainly difficult for credit cards, right? And that's a challenge to issuers to get them on board and to get them to promote this program is still in very early stages, has issues with user experience to work out and general adoption. But I think it's a great experiment and a great evolution of A2A versus cards, and seeing how those are going to play together, and the natural fallout of which bid for which type of transaction. So something definitely to observe and see what the adoption is like, what the rollout is like, and if this model is viable. Yeah.
Question, comment, I guess, on that is, one of the things with interchange, right, is there's this whole ecosystem behind the scenes of like chargebacks and rules about who's accountable for fraud and liability shift and all that sort of stuff. And so I guess, like, as they standardize this, like, is that burden, being distributed across the players? Is it being redistributed? Because I guess that's kind of an interesting thing to think of, is you're going to charge the same amount, but then you start seeing people shift to, real-time payments. And I guess the banks could make a lot more money because they're not, potentially, I don't know. But then who's taking ownership of that, the liability, the chargebacks and all the regulation and stuff that are the benefit of the rails.
Yeah, Marcia, I think, great point. It brings up a lot, is this really viable? And who's going to pay for it at the end of the day? I don't believe that the rules around liability or chargebacks will change. It's just that certain players are, going to eat, not going to make as much money, and potentially have to eat some of this to promote adoption. I don't have the specific details. If anyone wants to jump in, the card networks are going to be the ones to be able to speak to that. And of course the banks more specifically. But it raises a great point. How are these economics really going to work out? And will we have the same level of service that has been, provided on full interchange transactions? Okay, great. Cool. So those were our highlights from Latin America. And if you caught we did similar, we have a similar presentation for the US and for Asia Pacific, which we won't go into in detail now. You can find all of that information on YouTube. We have those presentations recorded and up there. But we did kind of want to show you all how these trends in Latin America are stacking up against the rest of the world. So here we kind of have the major trends plotted here. So we just see everything we just covered in Latin America. In the US and Asia Pacific, you can take a look at those major developments that we were looking at. And what we did was kind of think about, all right, how are these developments around the world, how are they categorized into themes, and can we kind of think about global themes? And certainly, you know, this light green color represents real-time payments and alternative payment methods in general. And that is certainly the dominant trend, right? The proliferation, the growth, and the increasing sophistication of these systems. Okay, so you have in Asia Pacific, for example, right? India, UPI still having even though it's already dominant and it's already the world's largest RTP system, still having massive runway for growth. I believe it is only penetrated 40% of internet users, whereas in Brazil, Pix is already penetrated over 90% of the population. So UPI still has huge room to grow, and credit, whereas Pix right now is really innovating along different payment use cases, the next evolution for UPI is most likely going to be credit, which is a fascinating development. We see in the US market, which is kind of considered where cards might be considered safe, we see growing surcharging by merchants to accept card payments, and increasing appetite for alternative payments, especially buy now, pay later, among younger generations in the US. So kind of early stage disruption or challenging of traditional payment methods, but certainly is there present and something to be watching.
One more comment on that. I totally agree. One of the things that's interesting is like Affirm is starting to do, like in the digital wallet, like Apple Pay and PayPal, like they're becoming cards in the wallet. So with the ability to do direct deposit to PayPal or Venmo or whatever, and then having them available in the wallet, like what I'm starting to see, I think, is that our US ecosystem is going to be fractured, because why would a merchant, like if back in the days when, you know, the merchants used to have a half a dozen terminals, like I think we're going to start seeing that in the US as, you know, they're going to start maybe showing a preference for these alternate things that are going to have lower fees for them. So I think that's in its early days, but I expect to see that trend ramping up.
100%. I would agree. I would agree, Marcia.
Can I just an extension on that? In the US, it used to be that the merchants were required to charge the same price for goods regardless of the payment method. And that's been, to a great extent, that's gone away now, because you're getting ridiculous fees on some cards and there's no fee at all on cash. So are there any kind of regulations, especially across Latin America, that the merchants are required to sell the goods at a set price and they can't discount it if it's cash? Is there any kind of restrictions on that? I'm hoping not.
Nick, to my knowledge, there are not any restrictions restrictions on pricing. Of course, the card networks, you know, want their rules state that you cannot surcharge and you cannot discount for cash. However, we all know that that is not really enforced and not really followed in Latin America. You see cash discounts all over the place. You see incentives even for, or you see cash discounts or surcharging take place. It is a widespread practice. We're starting to see that more and more in the US. Well,
and this is, because this is where it gets more complex. And I think it was Guatemala, the last one, where there's a 1.5% fee regardless. It's like you're getting different services depending on which payment method you're using. And if the government is this is concerning to me, because if the government is enforcing the same payment, the same commission, then it's not the merchant that's going to lose, it's going to be the consumer, because the consumer is going to maybe assume that they're getting the same service from all of them when they're not. There's no purchase guarantee on a straight send of funds or a debit card transaction where there is for a credit card. That's a huge deal that people are going to discover further down the road when they need it and find out it's not there. So it's a little concerning that Guatemala is doing that. I hope other countries don't follow. What I would like is transparency of, like, hey, if you use this credit card, it's very clear, everyone knows there's a guarantee on this. If you're using a debit card, there isn't. I'd like the transparency to the consumer. And then the merchant maybe will then have the ability to say, hey, we're going to do a 1% discount if you use debit cards or real-time payments, because we pay less that way. We'll pass that on to you as a consumer. I know that's asking for a lot, but that's for us in the industry, that sounds easy to understand. Whereas for other people that are not in the industry, that's going to be a much more difficult learning curve. But anyway,
so in Guatemala, just to clarify, it's not a government project. What we showed on the slide is a private initiative, and not a wallet, but Quick is a private scheme developed by VisaNet and all of the banks. So it's not central bank mandated, it's not government mandated. It's an option that they're trying to develop in order to push digitization overall. But you do raise a great point.
Because Visa will, Visa, basically Visa's pushing it, then they would like to get the same fee for a funds transfer where there's no liability associated with it. Nice for them. I thought that was a government one. So thank you for clarifying that.
Yeah. So this one is very interesting, and I think it's low adoption rates so far. So it's just going to be interesting to see how it unfolds. All right. So we've got our RTPs and APMs, and there's a whole bunch of subtopics to push into there, right? Related to everything you just mentioned, Nick. Kind of the second major trend is we talk a lot about regulation ramping up, which is, we have the next two trends, financial deregulation and opening up of markets occurring in Argentina, and interestingly in Asia. In China and Japan, we see these markets opening up their financial segments and actually being more amenable to foreign investment and integration with the global digital economy. And China is particularly interesting. We see the card industry actually growing in China, where in past years and decades, it's really been the wallets that's dominating that. And Japan, for whatever reason, right now in 2025, experiencing a flood of foreign investment in fintech. So kind of some interesting developments there.
Well, I noticed in the Japan, sorry for interrupting it. So I noticed in the Japan one early on, one of the first slides, Japan had a ridiculously high level of cash usage that I was not expecting at all. And it's like, it's like, how
over
come
50%.
That's the case?
Japan is this conundrum, it's an older population, very traditional and conservative population, coupled with this very techie, tech forward, heavy gaming culture. It's a fascinating place for payments. And that's why right now at this point in time, for example, Wise is the first foreign company to be authorized to connect to the local clearinghouse for cross-border transactions. You're starting to see major investments from big fintechs for the first time in Japan, which could potentially begin to move the needle. There's also quite an interesting crypto industry developing Japan. So very, very interesting market to watch. Okay. So we have financial opening up. We also have financial regulatory crackdown, which is, I think, what we hear more about. We hear about more often. In the US, we see this. In Australia, we see the central bank really declaring war on payment fees overall. This is going to be impacting cards, potentially pushing flows towards alternative payments, banning surcharging. And so this is, regulation we know is something to be watching in terms of increasing cost of compliance. In the US, fintechs having a more and more difficult time accessing the banking system, accessing bank accounts. So there's lots of flavors of regulatory crackdown, something to watch, certainly. Another big finding out of this global analysis we did was all of a sudden, stablecoin has gained new relevance and legitimacy. Now, stablecoin has been ramping up for several years. It's not a brand new innovation, but seemingly overnight, it has become the talk of the town, and has really gained some legitimacy as regulators are really taking it seriously, particularly in the US and in Europe. So, and out of Singapore, there's already been for 2 years now a very robust stablecoin regulation, which has inspired a lot of stablecoin innovation and, you know, reworking of the financial system. So when we're looking at this global analysis, thinking about cross-border payments, really stablecoin is what came to the top. I wanted to ask you, Cesar, do you agree that stablecoin, when there's so much going on in cross-border payments around the world, is stablecoin, you know, go to the top of the priority list there? Is that what's moving the fastest? Is that the most interesting thing to watch? Are there other projects or other technologies that are not captured here that are more interesting or equally interesting? What's your take there?
I mean, personally speaking, I think stablecoin I think it's a cool alternative to traditional payments, but it is highly dependent on regulation, right? So it's just so the markets you just mentioned, the US, Singapore, even like some countries in Europe, currencies are pretty convertible already, right? So it's fairly easy to move funds between those countries. Even through traditional payment methods, usually have faster settlements, usually have a fair and good pricing. So I don't know if stablecoin will actually be the answer for those corridors, but I think there is definitely a good applicability for the global south, for the emerging economies. You know, the restricted currencies, Brazil, India, China, Colombia. I think there is also there is a strong appetite for something like that. My only doubt is costs and how those things will eventually be combined with regulation, right? Because it's not a matter of how faster or how easier it is to move the money, but how you can do that in a compliant way that doesn't interfere with the country regulation.
Yeah, got it. So yeah, these are the major themes that we see unfolding around the world. And we wanted to kind of do something fun on the next slide. Kind of Cesar and I and the team put our heads together, and based on this, you know, global analysis that we've done, we've kind of come up with our thoughts around short-term, medium-term, and long-term predictions. And we'd love to get your guys' opinion and take here, and throw in if you have any other predictions you want to throw in the mix. But I think this is helpful and kind of fun, right? So just to start off, in the short term, or 1 to 2 years, as RTP and A2A grow, we're going to have to, industry is going to have to come to terms with push payment fraud. We haven't really talked about fraud in RTP but this is going to be increasingly something the industry comes to term with. Kind of, you know, lack of customer protection, as you were saying, Nick. How's the industry going to deal with that? Right? Contactless and recurring RTP becoming a reality, right? As showcased in Brazil. Cash globally declining to less than 30% of consumption. Small businesses, right? As cash kind of continues to decline, where are the next growth opportunities? Small business now becoming central to payment volume growth. Along the same lines, verticalized SaaS gaining relevant share over SMB banking activity, all right? And social media platforms competing for marketplace clients through new shopping initiatives. So this is all about, as cash continues to decline, where are the new opportunities for growth and the new opportunities for expansion, right? And as other payment method, alternative payment method rails scale, what are the challenges that is going to come with that the industry is going to have to grapple with? All right, so we have a little poll here we're going to launch. We'd love to know, which of these trends do you all think is most likely to come true in the short term? All right, so go ahead and up on your screen, you'll see the poll. Going to give you guys a few, about a minute to respond. Okay, so is it going to be push payment fraud? Is it going to be contactless and recurring RTP? Cash declining? SMBs becoming central to payment volume growth? Or verticalized SaaS or social media? All right, we've got about half of everyone has responded. Responses are still coming in. We'll take about 10, 15 more seconds. Got some interesting opinions so far. All right, let's go ahead and close that. We can share the results. All right, so polling the audience, you guys think that contactless and recurring RTP becoming a reality is the most likely? Certainly, that's already taking place in Brazil or already announced to be taking place, so that seems very feasible, right? Followed by push payment fraud and SMBs, right? So very interesting. So in the next 1 to 2 years, these are the major occurrences we can expect to happen. Okay.
Can I just add a few things before we move to the medium term? Yeah, because we were talking before about cross-border and some trends, but also relate to RTP, what we can see, and even in regions that we didn't cover before, like MEA and Europe, we see that there's a significant acceleration in the development of RTPs, and they are already thinking about cross-border and remittance since the beginning. So if we think about, for example, even private-led initiatives like Vita Wallet in Europe, which is like trying to create some unique payment method between the countries, already launching in Germany, France. We also have Iris payments, which in Greece, it's also already prioritizing interoperability with other European payment methods. So I guess all these RTPs, they're also trying to focus on cross-border and international remittance, which can also be one thing that we can look into the future.
Hey, to jump over there, I want to see ISO 222 is a process to do it. It does the mandatory process for RTP for cross-border. ISO as a regulation or protocol to use it for payment is going to be the mandatory in the next 2 years. That's my perception. You put the RTP as a point on the top of the line.
Perfect. No, makes a lot of sense. Okay, so thinking more medium term, we'll have Cesar kind of walk us through our PCMI predictions.
Yeah, so the first one we have here is actually value-added services becoming more central, right, to payments and to merchants in general. I particularly like this one because we do tend to think that, or a lot of people tend to think that payments is a commodity, but reality is that it's a very complex and operational process, and VAS definitely helps merchant with this complexity, right? Not the payment processing itself, but all the complexity around accepting payments. The second one we have is the like equalizing fees across cards and APMs, and I think that's something that probably the market will force all the different players to do. Probably we have a big gap today between RTP and cards, and what we're seeing today is that card pricing is coming down. They're trying to expand their use case, especially for the P2P and informal SMB. And at the same time, we are seeing like some of the governments trying to stipulate interchange for RTP. So we do think at some point those fees will be around the same. Will be more focused on the use cases than the product itself. Then 30% of the world will gain access to credit via no-card methods. So this is basically the buy now, pay later solutions. And we foresee that growing very fast and especially backed by RTP. Then the fourth, which is related to cross-border and slightly with stablecoins as well, that we foresee that SWIFT and traditional bank-led cross-border transfers will lose market share to digital players, right? Being fintechs or digital banks or other players. And stablecoins might be one of the infrastructure plays around that growth. And the last one we have is that at least 30% of the banking transactions will be performed using open finance rails. So I think for me the key point here is that people need banking. They don't necessarily need many banks, right? They don't necessarily need to bank with a lot of institutions. So I think from an operational perspective, the wallets or however you call it, I think the initiators will end up holding all this data and will orchestrate your different assets and payment methods and bank accounts and digital accounts. And that will ultimately drive the usage up.
We may have lost Cesar there, but I think you guys got the main point.
Can you hear me? I can hear you.
Yes.
Which of these
we can hear
midterm? Oh yeah, now Cesar's back, but my bad. Okay, let's go ahead and see which midterm trends and predictions you all think are most likely to come true in the next 3 to 5 years. Which ones do you most buy into? Go ahead and take a look. Is it going to be VAS? Is it going to be equalizing of fees? Is it going to be, you know, a large volume of the population getting access to credit for the first time? SWIFT losing share? At least 30% of banking transactions performed using open finance. You don't necessarily need 5 bank accounts anymore or strong relationships with banks. You can operate it all through one platform, one open finance platform. All right, we'll take just about 10 more seconds before we wrap up. All right, we'll go ahead and we can end that. And what did you guys think? So pretty good distribution across, but the leading one, SWIFT and banks losing significant market share in cross-border payments. I think that one is clear with all of the disruption and options that are evolving along cross-border payments. So wonderful. Thank you guys. Very, very interesting. All right. And so just in the last couple minutes that we have here, what's going to happen long term as we think 5 years out? All right. Our first prediction here is that finance will be rewritten on top of programmable money. This is really referring to stablecoin and blockchain. And this is really referencing Singapore, the most advanced market in the world, which is already having stablecoin usage across multiple payment verticals, high transaction value, low transaction value, retail, wholesale, B2B, as a marker of what could happen in the future, right? So we see that in 5+ years out. Card networks eventually evolving into value-added service providers and loyalty clubs. I think, of course, their rails and their network will continue to be part of their business. That's not going away anytime soon. But their primary drivers, we see evolving into these 2 kind of pillars. Long-term, right? Debit cards potentially becoming obsolete with the complete scaling of account access, free and instant account access. Unless there's some significant value proposition evolution, debit cards may become obsolete. To that end, similarly, we see the spread of a single credential managing a variety of payment methods, what we might call a flex credential or something similar. One credential offering you access to credit, debit, crypto, loyalty, multi-currency wallets, etc. And then finally, the use of digital identity is widespread across the globe. Now, who will own digital identity? That is up in the air still, but this is a technology and really a need as we see fraud, growing in every area of the industry. So just to close us out, love to see which of these long-term trends do you think is most likely to transpire? As we kind of close out our session, our first coffee chat of the year, want to see what you guys think in terms of our long-term projections. All right. Is it going to be finance rewritten on top of programmable money, card networks evolving, debit cards becoming obsolete, single credential, use of digital identity? All right, we'll close out, just take about 10 more seconds here. I know folks have to drop. All right, so let's go ahead and see. And we see leader here is large part of the population using a single credential to manage a variety of payment methods. Certainly makes sense from a simplicity and user experience perspective, followed by digital identity. Fascinating. All right. Well, thank you guys. I think that's a very valuable exercise. I love to see your reactions. I want to thank you for joining us. Our next coffee chat, remember, the third Wednesday of every month. So we'll see you back here on April 16th. Thank you, Cesar. Thank you, Fernanda and Lautaro, for joining. Thanks, everyone, for your comments and participation, and we will see you next time.